Hi everyone, good evening. So today we are going to start our new chapter which is ratio analysis. So in this chapter basically today we will going to cover four topics. First of all, we will understand what is the meaning of a ratio. After that, why companies do ratio analysis. So objective of the ratio analysis. Then we will cover what is the advantage for the company and why, kind of the limitation also we will cover over here. Okay. So first, let me tell you in summarized way the meaning of the ratio. So ratio is basically a mathematical number you can say, which is calculated as a reference to relationship of two or more number. So this is basically nothing, but it is a mathematical number which is calculated by considering two or more number. Okay. For example, your GP gross profit is 10 and your revenue is 100. So if I say that what is your GP ratio, so your GP ratio is 10 divided by, so this is your GP ratio. So this is a mathematical number which can be in the fractions, which can be in a proportionate, which can be in a percentage also we can represent. Okay. Now, objective of ratio analysis. What is the objective? Why company do ratio analysis? So objective is basically from ratio analysis, companies know the area of the businesses which need more kind of the attentions. So to find out or to know area where more attention is required, more attention required. Okay. So if management wanted to, find out the area where more attention is required, then they do ratio analysis. Second, why they do potential area which can be, improved with the effort of desired directions. So some of the potential area where they can put more effort or some of the areas where they can, put less effort. So these potential area to identify potential area where company can make more effort. Okay. So this is the second objective you can say. And third objective is basically provide a deeper analysis of anything. So ratio analysis if company do, then this provide a deeper analysis. Okay. Ratio analysis provide deeper analysis for everything. Okay. For example, profitability, for example, liquidity. Okay. If management wants in detail or deeper in details analysis, then they do ratio analysis. Okay. So this is the third objective. If I say four objective, then cross functions or cross sections analysis if management wanted to do, then they do ratio analysis. Okay. So cross functions or you can say cross section analysis. Suppose there in a company there are 5 sections are there and company wanted to analyze each and every sections, then they do ratio analysis, and from a ratio result they can find out which ratio or which section is doing great. Okay. And the fifth objective we can find out that from ratio we can to provide information derived from financial statement useful for making objective and estimate for the future. Okay. If management want future estimate of for anything, future estimate for anything. Okay. If they wanted to increase sales, if they wanted to reduce cost, then they do ratio analysis. Okay. So if someone asks that okay, why companies do, what is the objective, then you can say that these are the 5 major objective to do ratio analysis. Okay. Now if we next our topic today is advantage of ratio analysis. So suppose one company is doing ratio analysis, so what is the major advantages, okay, for the companies if they do accounting ratio or ratio analysis. So this first advantage, you can say that this helps to understand efficiency of decisions. Okay, so from ratio analysis, management can identify that, okay, whether their decisions are efficient or not. So to understand efficiency of decisions, to understand efficiency efficiency of decisions. Okay, number one advantage is this one. Second is simply complex figure and establish a relationship. So ratio can actually simplify major numbers. Okay, so this simplify big figures into very smaller figure, and management can take decision in a very efficient manner. For example, I can explain you this, that okay, GP ratio come, again I'm giving one example, that okay, if company wanted to understand what is the GP ratio, and GP ratio is, if they wanted to see in number format, suppose GP is 1,48,626 and sales is 148,626. Okay, now from this figure, this is looking very complex figure. Okay, sales as well as gross profit. But if you present this thing in a ratio manner, that okay, this is the 10 times, okay, GP ratio is 10 times, 10 percentage, you can say, then management can understand this, you made simplify. And that is why ratio analysis a company normally do. Third objective, or third benefit is helpful in comparative analysis. If management wants to do two or three comparisons in any number, then ratio analysis is very important. Ratio are not to be calculated for 1 year only. When many year figure are kept side by side, they helps a great deal in exploring the trend visible in the businesses. The knowledge of trend help in the making project about business review. Okay, so third advantage is helpful in comparative analysis. Helpful in comparative analysis. Comparative analysis. How it is helpful in comparative analysis? See, suppose if company wanted to analyze 5 year data, 1, 2, 3, 4, 5, and if I put sales again in number format, 148 in the first year, second year 15 lakhs, third year 20 lakhs, it is bit difficult for the management to analyze. But if I put in the ratio format, suppose 1.2 here, 1.1 here, zero point 0.9 here, zero point 0.7 here, and 0.65 here. So from here management can easily see that okay, in fifth year management here last this 65 6.5 was sales, then it is increasing, then again increasing. So sales are in increasing order. We can easily observe these things, and that is why ratio analysis is very benefited. Okay, so that is number fourth benefit. If we talk about fifth benefit, then it is enable SWOT analysis. So ratio helps a great deal in explaining the changes occur in the businesses. The information of changes helps the management a great deal in understanding the current threat and opportunity and allow businesses to do its SWOT. Okay, so ratio enable businesses to do SWOT analysis. What is SWOT analysis? Strength, weaknesses, opportunity, and threat. If company wanted to do SWOT analysis, then ratio are the major tool that company uses and identify these individual component. Various comparison as we already discussed. So these are the majorly you know 4 or 5 advantage if company do the ratio analysis. Now we will see that okay, what is the limitation of ratio analysis? Limitation of ratio analysis. Ratio analysis. Okay. So the first limitation is here, limitation of accounting data. Accounting data gives an unwarranted impression of precise and financial. In fact, accounting data reflect a combination of record, fact, accounting convention, and personal judgment, which affect them materially. For example, profit of a business is not a precise and final figure. It is merely an opinion of the accounting based on the application of accounting policy. Okay. So the number one is, if you are calculating ratio, then number one limitation is accounting data is not accurate. Okay. So limitation of accounting data, you can say limitation of accounting data, because this data is not precise and very correct, because everyone knows here that when you calculate the profit, you do a lot of assumptions, a lot of estimates, and non-cash item also you consider, because you are doing accrual basis of accounting, and some are the estimates, some are the principles you consider, and that is why this data is not correct. So how your ratio will be correct? So this is the number one limitation. Second limitation is ignore price level changes. The financial accounting is based on stable money measurement principle. It implies assume that price level changes are either non-existence or minimal, but truth is that we are normally living in inflation economy where the power of money is decline consistently. It changes in the price level making analysis of my financial. This is the very important point, because when you do the ratio analysis, you forget price level changes. Okay, so suppose you are comparing 3 year or 5 year data, year 1, 2, 3, 4, and 5. You are comparing sales figure. Okay, now here you made ratio 1.5, 1.2, 1.3, 0.7, 0.9, like that. Okay, but here what you ignore, you are ignoring price level changes. Okay, because every year inflation is increasing or decreasing, so that factor you are not considering here. That is why how you can compare year 1 detail with the year 5, right? Here inflation is 7%, every year it is 7% increasing, then how you can compare this sales figure with this sales figures? That's very important point. So here the price level changes or inflation is not considered when you are doing ratio analysis. So this is the number second limitation. Now third limitation is ignore qualitative or non-monetary aspect. Accounting provide information about current monetary aspect of the businesses. Hence, ratio also reflect only the monetary aspect, ignoring completely the non-monetary qualities. Okay. So here, non-monetary aspect not considered. Okay. Only non-monetary aspect do not consider in ratio analysis. Okay, so this is the number fourth limitation. Fifth is variation in accounting practices. There are different accounting policy for valuation of inventory, calculation of depreciation, treatment of intangible asset, definition of certain financial variable, etc. available for various aspects of the business transactions. These variables leave a big question mark on the cross-section analysis. So this is again very important point, because for each and every in accounting there is no specific formulas or method provided. Okay, everything valuation kind of the things, or different valuation methods are there, different depreciation methods are there. So there is no straightforward one formula there, and that is why it is uh, you cannot say that ratios are very short. Forecasting of the future trend based on only on historical data is not a feasible. Proper forecasting require consideration of non-financial factor as well. Okay, so when you are doing forecasting, you consider only historical data, which is not correct. Historical data you consider at the time of future forecasting, which is not correct. So this is again the limitation. So that's how we have completed that. These are the some of the limitations also. But overall, uh, uh, many limitations are there, but still ratio are very important when you are doing analysis, when you are observing the businesses. So thank you very much. We will start our next video in tomorrow. Thank you so much.